Hey everyone, welcome to Bald Guy Money. I am Bald Guy, and I've been saying for some time now that the stock market is in a bubble and that at some point in the near future we should see a correction. And to visualize that for you, I want to show you all the price of the S&P 500 measured in gold, which since 1987 has been an average of 1.8 ounces of gold to purchase the S&P 500 index. It got as low as 0.8 ounces of gold, so less than 1 ounce during the financial crisis crash in 2011 and 2012, and today it costs 2.2 ounces of gold to buy the S&P 500, which is 22% higher than the norm since 1987 and 175% more than what we may expect to see in a real recessionary crash like we saw in 2011 and 2012. Now, as far as I'm concerned, when we do the same exercise with silver, the real scale of this bubble is revealed because gold has been propelled by central bank buying in anticipation of the next major global US dollar crisis. But the fact is, much of the gains we can expect to see on silver won't come until that crisis has been triggered, as we saw in 2011 when silver skyrocketed to an average price of $35.12 per ounce for that year, making it so the S&P 500 only cost 36 ounces of silver, meaning if we priced silver in the same way today as we did in 2011, it would give us an implied price of $169.47 per ounce of silver. Now, I am not saying that is what the value of silver is today, obviously not, because a part of this message is that stocks are in a bubble, which suggests they are priced too high and must come down. That said, when we look at things like silver in relation to stocks or silver in relation to gold over the last 30 years, which as you can see here at a gold to silver ratio of 91 ounces of silver to 1 ounce of gold today, it becomes very clear that silver is not in a traditional bubble as we understand it, but in what I would call a reverse bubble with prices irrationally lower than what they should be. So in this video, I want to talk about exactly that. I want to tell you all what I think a reverse bubble is, what the signs of it are, then I want to talk about what happens when a reverse bubble pops, and we'll finish this video with an interesting comment I got from a viewer, and that is, will you be able to buy a house with as little as 5 grams of gold in the future? Now, just before we dive in, if you're looking to buy the breakout in gold, which just closed at a record weekly high, or you want to get some silver before it follows gold up, please remember to go to www.summitmetals.com. They have everything you need from gold American Eagles to awesome prices on quarter-ounce Krugerrands and silver Austrian Philharmonic coins, which are definitely my choices right now. And while you're there, remember that first-time customers can still get 5 ounces of silver at spot by using the code NEWCUSTOMER while the deal lasts. Links to these deals in the video description below and everything at summitmetals.com. Okay, so jumping in, what is a reverse bubble? Well, to understand that, we first have to define what a bubble is. And my Patreon members will recognize this image from Investopedia, which says a bubble is when the price of something grows beyond its true value. But to be more specific, some things I have noticed as characteristics of bubbles are: any positive news associated with the investment or asset drive large moves up in price. Bad news associated with the investment or asset have little downside consequence, so mostly the bad news is ignored in a bubble, and a narrative circulating about the investment that is extremely positive, being repeated not only by financial news networks, but also average investors in casual conversations. So these are the hallmarks of a bubble. This is what I'm looking for when I try to identify a bubble, and I've given a couple examples there at the bottom of the screen, that being the dot-com bubble of 2000, as well as, my opinion, the Airbnb bubble of 2021. Now, in a reverse bubble, the opposite of these things would obviously be true. So, good news associated with the asset would be ignored, and when we look at gold's incredible breakout from historic price resistance, which happened last year in a continuation of an amazing climb in price going back to 2022, you can see that, although silver has done well in its own right, the trajectory of silver's move has been much flatter than we may have expected, meaning that a lot of the positive news on gold, which usually rubs off strongly on silver, causing higher increases in the price of silver versus gold, hasn't exactly worked that way yet. And this is happening at a time when even minor disappointments like the November Phase 1 stimulus news coming out of China disappointed markets, causing a dump in silver price. And that's despite the fact that silver has, once again, cracked above the $30 per ounce level and has risen in average closing price in 6 of the last 7 years, which are topics the financial news media have been completely silent about. So, is silver in a reverse bubble? I would say the answer is yes. And if there's any truth to what Josh Fair, who is the CEO and founder of the Scottsdale Mint, who, on a side note, produce fantastic gold and silver products that I own, is saying about a backlog at silver refineries as they struggle to meet COMEX good deliveries, it means that what I said about silver running into supply issues back in 2021 and 2022, and the videos are still there if you want to hold my feet to the fire. Anyhow, what I said then is coming true, and this reverse bubble for silver is about to pop. And that means my price target of $60 per ounce of silver by 2026 could come about very quickly, just like when we saw the last debt bubble pop and US dollar printing parties start in the wake of the global financial crisis, which sent silver up in 8 out of 9 months from a starting price of $17.96 per ounce all the way up to $47.91 per ounce. The only difference this time is we're starting from above $30 per ounce, not below $20 per ounce. So please let me know what you think about this reverse bubble message in the comments section below. Does this at all make sense to you? Do you think my price targets are too conservative, or do you think I have this all wrong? Now, one final thing before we move on, I want to let you all know that I will be purchasing gold and silver next week. I was waiting for the presidential inauguration news to kind of blow over, but this is just a message to let you all know about what I am doing. Despite the very real possibility of volatility between now and $60 silver and $3,000 gold, I remain on a schedule, and the only thing that will change is if we see a bigger pullback, like I think we could see, I will simply buy more. I'm just not risking it. I'm remaining on my schedule, and I just wanted to let you guys know about that. So with that covered, it's now time to get to this video's viewer question. And please remember, if you have any questions for me, please leave them in the comments section below. I select one question to appear in every video I do, and you never know, yours just may be next. And this week's question is more of a comment than a question, but I think it's really important to address considering what I covered in last week's video, which was the topic of how much gold and silver you'll need to buy a house when the market corrects. And as I was going through the comments, I saw this one from somebody who calls themselves Shrine of Life. And they said that after World War II, a house went for 5 grams of gold, and they stated that that is the real value of gold. So 5 grams of gold to buy a house. Now, it's an incredible claim and one that's been popularized, at least loosely, by Lynette Zhang, who is well known in the precious metals community for making such claims. And look, I don't have anything against Lynette personally. I don't know Lynette, but this is just one of a couple fundamental issues that we disagree on. Another one being how important graded and collectible coins are in a precious metal stack, because that's another position of hers I disagree with completely. And I think the crashing premiums in the pre-33 graded and collectible gold market is a great example of why it's at least good to check in with other sources when it comes to the information she provides, or any other YouTuber when it comes to precious metals or investments for that matter. Always be skeptical about what you hear and always seek out multiple sources of information. Anyhow, coming back to the housing claim, if we look at how much a home in the USA cost right after World War II, so in 1946, you can see here, and my sources are always in the video description below, a home back then cost $5,150 US, which, if we measure 1 ounce of silver at $1, was 5,150 ounces of silver, and with gold being $35 per ounce at the time, that made a home 147 ounces of gold, and not too far off from where we are today. Although I will flag the major difference in price between silver and where we are today as a supporting point for what I talked about in the main part of this video. Anyhow, some people will argue and say, but that was a price in Europe after the war, and that still reflects that gold has a very high value in tough times. And if that's your argument, I'm totally fine with that, but please let me remind you, with these images of what Berlin and Warsaw looked like after the Second World War, that the continent had been ravaged by war, and yes, there were places that survived unscathed, but please understand, this is not an apples to apples comparison. And although I am super bullish on precious metals, and I think gold will be touching $3,000 per ounce soon, and I expect to see a new US dollar high for silver in 2026 once the US dollar weakens relative to other currencies, as we're already seeing new highs when measured in currencies like Australian dollars, which is what you see here, as well as Canadian dollars, which are touching that 2011 blow-off top high point right now. We have to remain realistic and grounded in reality when it comes to our expectations on precious metals, because setting too high an expectation for precious metals or the value of metals relative to other assets can mean that we don't prepare ourselves correctly for the future. And as a person who owns several properties, there is nothing I would like more than to add a few more to my portfolio with an ounce of gold or 20 ounces of silver. But it doesn't mean I can stop stacking now and I can just sit on what I have while I wait to cash in my lottery ticket. Because if I put myself in the shoes of a person on the sell side of such a transaction, which is something I can easily do as I have multiple properties, 5 grams of gold is a price I would never accept, even for my most modest property, not only based on my understanding of the market as things stand today, but on what we can observe throughout history, even during these magical periods that many YouTube personalities like to wax poetically about, while ignoring the fact that people were starving, living in rubble, and trying to scrounge any amount of real money together so they could afford to get the heck out of where they were in order to move to the United States, Canada, or Australia, and those, my friends, are just the facts. And it's why I said in last week's video, if you really want to be prepared to enter the housing market with precious metals, have 25 ounces of gold and 1,000 ounces of silver, which, since the first time I communicated this target to you, have increased in US dollar price by 46%, while the median US home price has fallen by 5%, bringing that target closer to reality. Now, I understand that many of you may be saying that's a lot of gold and silver to buy, and that's a fair comment, but as expensive and unaffordable as precious metals are getting right now for the average person, they should still be a source of hope. Not false hope, but real hope. So I'll conclude by saying, if 25 ounces of gold and 1,000 ounces of silver seems like a mountain too high to climb, do it little by little, and make this your first target, the minimum amount I have said gold and silver stackers should be moving towards, which is 5 ounces of gold and 200 ounces of silver. It may take you years to stack this up, but if you remain on a schedule, this is achievable, it is tangible, and it will help you out a lot more than 5 grams of gold in a bad situation, and that's just me being honest with you. Now, just before I finish, I want to remind you all that early signups are still open for the peer-to-peer marketplace at goldsilverswap.com. This is being put together by the Summit Metals team, and the goal of it is to allow you to buy for less and sell for more. So please sign up if that's something you want to be a part of. It costs absolutely nothing to sign up. And with that said, that's it for this video. I want to kindly ask anyone who enjoyed the content in this video to leave a like at this moment. If there's somebody in your life that you think needs to hear this message, please share this video with anyone and everyone that you think needs to hear this message. And until the next time we see each other, everyone, please take care of yourselves and take care of each other. Goodbye.